Hi Bankman, this is Vasant Ponkshe, a retired bank officer from Bank of Maharashtra. We all are aware that the news items about the government's intention to privatize the public sector banks is roaming around in all types of media. As per the media reports, they say that Niti Aayog has moved the proposal for the consideration of Government of India to either reduce the stake of Government of India in the public sector banks or privatize them or straight away sell some public sector banks. Many of my friends they suggested me that I should place my views in this regard for their consideration. We all know that in the industry, lot many deliberations are going on. Some young generation officers are very frightened with the news, and some old generation officers they are feeling embarrassed as to the bank in which they have grown, they have come up in their careers. The banks will lose their entity. So everywhere the atmosphere is very gloomy, and the interactions are taking place, and deliberations are also taking place as to public sector banks versus private sector bank. The another deliberations which are going on are they are saying as to whether merger of the banks would be all right or whether the privatization of the bank can be stopped or whether government should change its mind and all these things. So as per the suggestion of my colleagues, I decided to come out with this video for internal circulation of my own colleagues, in which I have tried to jot down the points and I will be deliberating on those points one by one. And I would like to have my own assessment as regards my perception of the issue of the attempts of Government of India for privatization of public sector bank. So let us go step by step. The Government of India is to announce the different sectors as categorization of those sectors as strategic sector or a non-strategic sector. In any strategic sector, according to Government of India, they want to keep only 4 public sector entities, and all the remaining entities which are in public sector in that particular sector or particular section, they will be either merged with each other or they will be privatized or they will be sold out. But in any case, the government is of the opinion that in any public strategic public sector, only 4 entities in the ownership of Government of India should be there. Now, there are a lot many debates and interactions going on, as I told you, and SWOT analysis is also being done as regards the performance of private banks and also the performance of public sector banks. Now, many have raised the concern, as I told you, I suggested to place my views. I would like to state here that being a person who reads minimum 60 to 80 pages per week and try to search the latest financial news items through blogs, through articles at local level, national level, international level, including RBI, Finance Ministry, ADB, World Bank, IMF, Basel, so on and so forth. I am trying to reach out to the banking staff through my video for private circulation. At the same time, I would like to clarify that I do not claim that I am an expert on the topic and I am open for corrections and suggestions. My placement is bound to have reflection of my reading of 15 years, my experience as banker for 40 years, my perceptions, and it may differ from person to person. While placing my views, I do not have any intention to criticize anybody, any authority, but I wish to read the things in my own assessment of the situation. Now, coming to the point, they say that it is estimated that around 90% entities in public sector in different sections, in different patterns of public sector, or say from different sectors will be either merged with other public sector entities from the same sector, or they will be sold or privatized or whatever it is. But finally, government wants that in any public sector, only 4 government entities will continue to function. As we all know, in my own assessment and as the strategic sector. So, as per the recent announcement of Finance Minister during the 20 lakh crores of packages, they say that only 4 public sector banks will remain in near future. As per my assessment, maybe in next 2 or 3 years. Now let us analyze what is the present situation. At present, there are six banks, mega banks you can say, after the recent mergers. Who are those banks? First is State Bank of India with 2,57,000 employees, Punjab National Bank with more than 1 lakh employees, Bank of Baroda with more than 84,000 employees, Canara Bank with 89,000 employees, Union Bank with more than 76,000 employees, and the sixth one is Indian Bank with more than 42,000 employees. Now, there are six standalone banks, those who are kept away from the merger. Which are those banks? Bank of Maharashtra with more than 13,000 staff, Central Bank of India with 35 or 36,000 staff, Bank of India with around 49,000 staff, Indian Overseas Bank with around 26,000 employees, Punjab and Sindh Bank with around 9,000 employees, and UCO Bank with around 23,000 employees. The position is that of 2019, which I got. When only four entities are to be kept in public sector from each sector, then those six banks which have emerged as after the mega merger cannot be considered for privatization, obviously. So one more round of mega merger has to take place, means banks like Union Bank of India or Indian Bank of India or Indian Bank or maybe any of the two from six mega banks will have to undergo a second round of mergers, and these banks will have to get merged into either of these four big banks, that is State Bank of India, Punjab National Bank, Bank of Baroda or Canara Bank. Of course, this is my own assessment. So there may not be any question of any further merger of remaining six standalone banks according to my assessment. When only four entities are to be kept in a particular sector, means only four banks have to be kept in the banking and financial sector, then according to me, there is no possibility that any of the six standalone banks will be merged into each other to form one more mega entity over and above the six mega banks which are there in the banking system of India. So instead of privatization, if all these six standalone banks are to be merged, then they will have to get merged into either of these four above listed banks, that is State Bank, Punjab National Bank, Bank of Baroda or Canara Bank. In that case also, these all six standalone banks are likely, or for that matter, they will lose their own entity. If that happens, only four public sector banks remain in the banking industry ultimately after say 2-3 years, then it will lead to a very difficult situation as far as the staffing pattern is concerned. Let us see that. If we take on an average, we will find that in all the four banks in India for separate sections, means they say in banks we will keep 7-8 banks, in other sectors of the public sector they will keep only 4. So as per my assessment, government will have to keep the uniformity across the board. So remaining 6 banks will have to be either merged into four public sector big banks, or they will have to be privatized, or they will have to be sold or to be kept on the block. Government has conducted various exercises like Gyan Sangam 1 and 2, and many more brainstorming stations have taken place in last 4 and 5 years. So the general trend, as we know, at the apex level is that slowly government should come out of the public sector and let the things operate as per the market forces operating in that particular sector. Now coming to international position, as per the international compulsions, government has no option but to go by the Basel compulsions as far as capital adequacy is concerned. Now when Basel III is yet to settle in banks in India in totality, there is a beginning of working on Basel IV already, you imagine. Now few nations have already started opposing the concept of Basel IV. Simultaneously, an agreement has taken place long back in between Basel and IFRS, that is International Financial Reporting Standards, about bringing new norms for international financial reporting at all levels all over the world. Now, according to IFRS, that in International Financial Reporting Standards, the norms for income recognition will undergo huge changes. Along with that, many strong restrictions will come. They will not allow income to be recognized unless it is actually received in fact, actually received. As far as Indian companies are, Indian accountants and chartered accountants are concerned, they are aware of all these things. And as I understand, they are keeping their proposed or protective or you may say dummy or presumptive set of balance sheets, if at all these standards are to be implemented. And they want to know what would be the position of their own balance sheet post implementation of these IFRS standards. Now, Indian accounting standards are based on and substantially converge with the IFRS standards as issued by the board. India has not adopted yet IFRS standards for reporting by domestic company and has not yet finally committed anything about adopting it to IFRS. Now, if those standards are to be applied in banks, then many banks will have to be provide extra amounts to the extent of thousands of crores of rupees in its balance sheets, which will be huge, and the balance sheets of the banks will badly affect. Now, it's good that till today the government of India has not allowed the implementation of those standards and it has been postponed, but sooner or the later they will have to implement this. Now, in such a situation, Basel III is a compulsion. Government may not have money to provide more and more capital to public sector banks as it was offering or it was providing either to. Now, we all are aware that due to Corona, the Indian economy is bleeding as well as all international economies are bleeding. And experts say that it was, as far as Indian economy is concerned, experts say that it was already in trouble even before Corona. Before Corona, we all know job loss in India was already highest and the jobless data was not released. We all know that the GDP calculation patterns have been changed meanwhile. We also know that the revenue of Government of India is reducing day by day. The pitfalls of 20 lakh crore package are slowly coming out day in and day out. Incidentally, the entire package has been pushed through public sector banks only, and lakhs of public sector bank employees are serving the nation to see that the package is through to the nook and corner of the country, risking their own life without any sufficient insurance cover. Naturally, I salute all those bank employees, frontline bank employees, those who are working around the clock, risking their life. Now, due to Corona outburst, moratorium of 6 months has been granted by Reserve Bank, so naturally the benefit has been passed on by the banks to their own borrowers in case of loans and advances. RBI has also pushed huge liquidity in the banking sector, but to my surprise, banks are not able to lend more and more, maybe because there are no takers also, and as a result of that, banks are parking huge funds with Reserve Bank of India to earn the interest out of reverse repo rate benefits, and the Reserve Bank had to pay lakhs of crores of rupees to the banks on account of reverse repo interest. That is why, as I perceive, the Reserve Bank of India has drastically reduced the reverse repo rate in last 4 to 5 months. Now, in banks, accounting issues are coming up, some legal issues are coming up, since some systemic issues are also coming up. A case is in queue in Supreme Court of India, as we all know that the payment of interest on loans and advances taken by the borrowers during the moratorium period. The argument is that when the 6 months moratorium has been given, why banks should charge the interest on loans and advances for the moratorium period. Now the case is there in Supreme Court. Reserve Bank has said that if that is to be there, 2 lakh crores of interest income will be lost by banks. Now tomorrow, if Supreme Court decides that banks should not charge any interest from borrowers for the moratorium period, then again the balance sheets of the bank will further take a big hit and banks will not be allowed to charge interest to the extent of 2 lakh crores, entire banking industry, 2 lakh crores on the moratorium period given to the borrower.